Welcome everyone, John Person here from PersonsPlanet.com at the Las Vegas Traders Expo, and with me today is Andrew Hecht from SeekingAlpha.com. Andrew's a commodity specialist, and I think it'd be important to cover, we covered gold a few minutes ago, but crude oil, the lifeblood of our, I guess, economy, lifeblood of moving around. Not everyone owns Tesla. Ocean liners, last I checked, aren't powered by solar, so we need energy and crude oil. So at this point, it's been a really interesting trade with crude oil. It's been trapped between 50, 60 for almost 6 months. Are you expecting crude oil in your work and your analysis to break out either to the upside or the downside for 2020?
I'm expecting a wild and volatile year next year. Now, look, and the reason is politics. We're going to go into the 2020 presidential election season. The crude oil production in the United States is now at 12.6 million barrels a day. We produce more than the Russians and the Saudis. So we're the most important producer in the world these days. The progressive wing of the Democratic Party, which is taking hold and has a lot of support, as we go into the election season, one of the leading candidates, Elizabeth Warren, has said that she would ban fracking on day one of her administration. Now, that has humongous ramifications for oil production, for natural gas production in the United States, and that will ripple around the world. 12.6 million barrels a day of production and massive amounts of natural gas, which is now going around the world on ocean vessels. If we stop fracking day one if she were elected president, that could cause enormous volatility in the natural gas and oil markets. Now, I believe natural gas and oil will start to focus on this in 2020 as the election years, and we could see a lot of volatility correlated with the polls next year. So I'm expecting lots of action. No $10 range next year. Okay.
Yeah, I think if you get more of that talk and support, I mean, that would also reduce the employment sector. So it's kind of like, you may cause volatility, but then you're also maybe going to cause a reduction in demand. So where do you see that balance?
But then again, look, you're talking about in the U.S., but oil is a global. Mark Rich once said that crude oil is the blood that flows through the veins of the earth. It's the most important commodity, the fossil fuel. Now, the world is moving away from using crude oil, but that's not going to happen for years. We're too addicted to it. So even if demand in the U.S. goes down because jobs go down, China will still use crude oil, Europe. If we significantly reduce the 12.6 million barrels that are coming out of the U.S. today, that's going to have an effect on the world.
So do you think the investors should be more positioned in the commodity itself, or do you see opportunities in maybe subsector ETFs, the oil services, or the oil and gas exploration XOP?
Great question, John. I will tell you, I would rather have exposure today in the price of the commodity than in these companies. Because as you said, first of all, the political situation could affect the companies that produce it. And as you said, if demand goes down, that could affect the companies. But the volatility in terms of the commodity itself could get extreme next year. And I'd rather play oil ETFs like the UCO, SCO, those leveraged to trade the range, look for breakouts and breakdowns, or USO and BNO. BNO is the Brent crude oil. And then we haven't even discussed Iran. That's a problem in the Middle East that can, we found that in the middle of September, that caused a spike in the crude oil price overnight.
Which a lot of people are very surprised by the attack in Saudi Arabia's refinery, which caused the market to gap up on a Sunday night, $8 to $9, and it came right back down. I mean, years ago, if we had an attack like that, crude oil would have shot up $10, $15, and maybe a $20 move, right? We've had situations where tankers have been seized. There's been all types of short-term supply disruptions, and yet crude oils remain stable.
That's right. That's because the U.S. produces 12.6 million barrels a day, and we never did in the past. And President Trump came out and said right after that he's totally ready to release oil from the SPR, and that's a very important.
So to your point, what you just said, Elizabeth Warren comes into office and reduces fracking. This is a very volatile situation.
Exactly. The
Excellent.
other thing to keep in mind, OPEC meeting December 5th and 6th on the short-term horizon. OPEC, they would like to see the price of oil higher, and the Saudis want to do an IPO of Aramco. So ironically, to sell a piece of the stake in the state oil company, they need oil prices higher. So a further production cut is not out of the question on December 5th and 6th.
Great points. Andrew, thanks for joining us here, and I hope everyone enjoyed this topic on crude oil prices for the near term, as well as for the 2020 time period. Thanks for joining us here at the Las Vegas Traders Expo. Thank you, Andrew.
Thanks so much, John.
Very nice.
Pleasure.